The dollar continues to fall as investors shake off fears regarding the banking crisis situation that we have been facing the last couple of weeks. It actually seems like investors, traders are betting that the dollar is actually going to continue down, basically saying that, okay, the banking situation is not that bad, and the Federal Reserve in all of this picture is looking like it may be actually headed towards rate cuts at some point, no longer such a hawkish dollar. It seems like the case for the dollar bullish train, at least for the time being, is no longer there. And in my personal opinion, I think that there are some really good trading setups that we're going to jump into here today. Welcome back to my channel. My name is Nick, and thanks for being here. Let's jump in. Okay guys, so I've got to start out with something here. I mentioned this a little bit in my live stream today, so apologies if I'm repeating myself if you've already heard this. The Federal Reserve's target for inflation is 2%. What are we at right now? Well, if we zoom up here on the Edge Finder, we can see we're at 6%, which is a ways away from our target of 2% here according to the Federal Reserve. However, things are headed in the right direction. And I want to ask you guys, think about this for my friends out there who are, interested in fundamental analysis and paying attention to what really drives the markets. Why did interest rates go up? It was because inflation was very high and rising dramatically throughout 2021 and 2020. So why is the dollar now weakening? Well, look what's happening. Inflation, at least for the time being, seems to have peaked. Now, there are many people who would disagree and say, well, it's going to go back up, and when it does, the dollar is going to spike and things. But here on this channel, we trend follow. We follow what is in front of us, what is going on with the markets, and we adjust risk accordingly. Right now, the inflation story is reversing. It seems like interest rates are slowing down. It seems like inflation is cooling. And what does that mean for the dollar? Well, it means the same bullish case that we saw in 2021 and 2022 is now following the inflation chart. It's going down. And right now, the dollar does not look very stable. In my opinion, if we actually break through these structure lows here on the 4-hour chart, we possibly have a bigger move coming for the dollar bears. Now, again, this is sort of a change in pace for me for the last, couple years. I've been predominantly dollar bullish, but in the last, several months, I've been more on the side of buying gold, looking at the indices a little bit closer. And in this video, we're going to go through the bullish case for what I think gold and indices could enjoy going into the next couple, perhaps the remainder of this year. Anyways, the dollar right now coming down to this level of support. If it can't hold this, it's possible that we see more downside for the dollar coming as this trade again seems to be reversing with inflation more and more, and evidenced by the strong pop in indices. We broke out to the upside, and if you guys were watching my channel, I mentioned, hey, this is a red flag for the bulls. Be very careful. We're coming in here, and sure enough, we completely broke out of this downward trend. Very impressive move, and for my longer term positions, this is looking really good for the S&P trades that I have on. Short term positions, in my bullish, I am getting closer. Now, I already have gold bullish trades of interest, which I'll get to gold in just a second. But for my friends who trade the US 30, the S&P 500, the NAS, things are looking like they're forming for some possible bullish scenarios. If we're looking at the technicals here, we zoom in, we're now looking at the 4-hour chart a little closer. If we draw fibs from the swing low here that we put in during March here, the low, and then we put the high in, hey, a retest of this structure actually looks really attractive. This is a 50% retracement. Again, after breaking to the upside, things look really strong here. And a pullback to this zone actually looks like it might be an opportunity to get long. Now, the Edge Finder doesn't quite have us there yet, but it's getting closer. If I go take a look at the indices and we go to SPX 500, we take a look at this, you can see we have a score of -2. Now, the trend reading has just recently flipped to bullish. There's still a few factors here that I want to pay attention to, but in the month of April, which starts again in April very soon.
You serious, Clark?
We get seasonal upward bullishness for the S&P 500, which could be very, very interesting to go into. Now, of course, also what I've noticed is that the crowd is increasingly short biased on the indices, and institutional money, this is a red flag. This is why we're not fully bought into the bullish case. The indices are still very short on the institutional side. Speaking of institutional side, let's take a look at the smart money tracker here for you guys. This is the latest data that we have. this is what really caught my eye. The Japanese yen, very, very short biased by institutional investors. Now, 91%, if we actually scroll down, Frank and I were looking at this on the stream today. If we narrow in on the Japanese yen, what you can see here is that in terms of, let me scroll up so you can see the column that we're looking at. We're looking at long contracts versus short contracts open on the futures market. We have this data from the COT reports. We pull this into our software so that traders can take a look at it. The Japanese yen, 7,200 long contracts, 73,600 short contracts. A wild preference for the short side overall. This is interesting because, again, what you guys who watch the channel on the regular know, you know the Japanese yen is inherently the risk off currency. So when we see the Japanese yen getting sold, now remember, if you're confused by this, when I say sold and this chart is going up, what I mean is the Japanese yen is getting sold and counter currencies like the euro, the pound, they're getting bought. It shows a clear preference for risk on appetite, meaning stocks and gold and things like that potentially benefiting from that change in pace. We've broken out to the upside. We're looking at Euro JPY right now. This is an impressive chart to the upside. For the day traders out there, we talk about pound yen, a very commonly beloved day trading chart for traders out there. And this one looks bullish, right? We have a lot of bullish moves here happening on the Japanese yen currency crosses. Pound yen, CAD yen, NZD JPY, Euro yen, they're benefiting very strongly from this weakness in the Japanese yen and this preference for risk on assets at this time. Speaking of risk on, here's the NASDAQ 100, which just broke out another key level. And this thing is kind of a beast right now. It's got a big breakout to the upside, and breaks and retests actually look attractive here, as well as tech stocks seem to be exploding right now. Speaking of tech stocks, here's a couple that I own. You've got NVIDIA, which have gone parabolic, right? You've got NVIDIA, you've got Meta stock, which if you like Instagram or Facebook, that's the stock that owns them, right? You've got Meta going crazy, and a whole list of other ones. You've got, of course, some of the bigger names like Amazon, also benefiting a little bit coming off the lows. And you've got things like Google, which we're all using right now. If you're watching YouTube, you're using Google's platform. They own YouTube, right? Also popping here recently. So, one thing to think about here is that things seem to be moving in a risk-on direction, and we can see that sort of backed up by the Edgefinders data here. Now, not entirely on the indices do we have that just yet. We'll have to see what the latest report comes out. This data gets updated once a week, and if you do not have access to it, here's how you can get access to it. We have a promo going on right now, and if you would like access to the Edge Finder, click the link at the top of the description. There will be a link to have a conversation with one of our support reps here at A1 Trading. You get access to our smart money tracker data, our retail sentiment indicator, the bank signals tab, high probability watch list, signals for 30 plus assets and pairs, and it's a one-time payment. So we built this software for traders who are looking for more data, who are looking to add confluence to their trading. As you see me using it each day in my videos, I genuinely think it is well worth the money. And if you're interested in it, we are actually doing discounts right now. Send a message to one of my support team members. The reason we do messages is because if you message in, you'll probably have some questions about the tool and maybe need some training on it. All of that comes with the tool, and you can get access to that just by clicking a link, sending us a message asking about the discount on the Edge Finder, and someone from my team will get you hooked up. So there you go. Gold, okay, gold, I am continuously still bullish on this one. If we take a look at what the Edge Finder has to say about gold, you can see it's actually one of our top buy ratings right now. And if I pull up the gold specific chart here, we'll go to gold. Let's take a look. So gold has a +5 reading, a bullish indication overall. COT data shows institutional money is 75% long. Retail sentiment, the crowd is very short. In terms of economic figures, it's a bit mixed. Unemployment on the rise a little bit, causing a bit of concern and possibly drifting gold up as people move their money into something they're trying to avoid possible fear situations, right? And then GDP growth also declining here. As of today, we had GDP numbers come out a little bit less than expected. And again, GDP growth slowing is oftentimes a bullish scenario for gold. inflation is still on the decline. Now, inflation on the decline, why does that help or hurt gold? Well, if you think about it, gold tends to do well during periods of quantitative easing, when lots of money is flooding the system. I'll show you guys something that might be very interesting to my fans who have made it this far in the video. Hey, let's do our thing. If you guys made it this far in the video, I mean, we're what, 10 minutes in? If you've spent 10 minutes with me here, if you're very serious about this stuff and you've made it this far in the video, comment down below. I'll try and leave a heart on your comment, just as a thank you for being here. I really appreciate, you know, people who stick around and love this stuff as much as I do. What's up? It's good to see you. I know you're out here grinding. This stuff is not easy, but it requires passion. And if you're making it this far into the videos, you clearly are interested as well. Look what happened in 2020, guys. We had a quick blip with fears in the market, but the printers turned on. Quantitative easing went crazy, and that caused gold to go parabolic as people were fearful of potential inflation and trying to hedge their money, as well as just money flooding into the system. It's got to go somewhere, right? It went into stocks and it went into gold, it went into Bitcoin. We are seeing some cases right now, in my opinion, for that to turn back on, right? Bank crises and having to print a lot of money to cause that to go away. And then also, not to mention, guys, the Federal Reserve slowing its rate hikes. That's potentially a very bullish thing for gold. So I'm looking on the even lower time frames, looking for breaks, retests, breaks, retests. If I take that trade, you guys will see it inside of the Discord if you are VIP members, which I know many of you guys already are. If you're not, the link for that will also be down below in the description. Come join the Discord. You can see trades being taken by myself and Frank and Ivan, our team here at A1 Trading. And again, if you have questions about that or want access to the Edge Finder, both of those things, you can just chat with us on our website and someone from my team will help you to get access. I'm still bullish on gold, still bullish. We're looking to be bullish in the indices, watching that closely, and we'll update you guys here as we go forward. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.